are your hosts, Don Getling and Gino Fonte.
Good afternoon, and thank you for joining me. I hope you're not too upset that I'll be interrupting the Dodgers game, so I will make a commitment that my co-host today will be bringing you up to speed on the latest play-by-play as it happens if it's important.
Right, every play, every time.
Well, that voice you may recognize is not Don Getling. Today I'm being joined by Daniel Hunt of Cherry Creek Mortgage. How you doing, Danny?
I'm good. Good to be there. I'm becoming a regular.
Yeah, well, that's kind of nice. You know, every once in a while when Don or I go off and play, we have one of our other Cherry Creek fellow mortgage planners join us here in the booth. And in fact, the booth today is at Vault Media Studios. As Don likes to say, the keys to the vault are at donandgino.com. So go ahead and go to donandgino.com, hit watch and listen live, and you can see what's going on in the studio. You can take a sneak peek at our guest who's wearing an awesome bow tie today. and you can see Dan Hunt, who's going to be giving you the sports play-by-play. And Dan, you're kind of a sports guy, so I'm sure you can handle that, right?
I'm a very big sports guy, and the Dodgers are my favorite team. I coach over at Hart, and the Mustang American Dodgers are my team. So
well, there we go.
There you go.
There we go.
And we had a big win last night.
There you go.
So
shout out to the boys.
Yeah, very excited today.
Well, thanks for joining us today. And as every week, we're going to bring you up to speed on what's going on in the financial world and how you can benefit. Most importantly, how you can benefit from this show is by listening and trying to apply these things in your life. And today's going to be no different. We're going to debunk the myths around mortgage insurance today. And, sometimes I get a lot of questions. Probably one of the biggest topics in the last 2 or 3 years have been regarding mortgage insurance. Prior to the fall in 2007, mortgage insurance was kind of a thing of the past and hadn't been around for a long time, Dan. And so as I grew up in the business, it wasn't important. And in the last 5 years, it's become one of the most important tools we've possibly used.
Right. I mean, we never, back from when I started in the business in 2001 up until about, the crash of 2008, you never even heard of more. I mean, mortgage insurance was something that you put on the back burner. You never even really paid attention to it.
Yeah, well, it's very important today, and we'll be going into details of how that works. But before we do that, I want to bring you up to speed on what's happening in the general economy. We want to go ahead and discuss the jobs report. As you know, Don and I are always talking about initial jobless claims. We use it as one of our primary indicators of what's happening across the country with jobs, because it's really the crux of everything else is if we've got great jobs, if we have less unemployment, everything else will get better. And I don't know if you saw today, Dan, but it was a shocker. It was what, 220? No, 344.
344.
Yeah, it's actually 344,000 initial claims. They were expecting 315. We've been seeing numbers close to 300, 302, 304, 310, 312. And as Don and I talk every week, we're always looking at trends. So this was a spike. It's something that's interesting. It's something we'll watch. One report doesn't make a trend, so we'll keep an eye on it. But how do you feel? Dan, are you seeing that, when you speak to people on a daily basis, are they afraid of their jobs? Do they feel like they're going to lose their jobs? Do you feel like the economy's on the rocks, or is it good?
I think it's getting better. I know that years ago, that was kind of what you felt people were going through. They were not too sure they were going to have a job. I don't see that much happening anymore.
Well, and I think that's one of the drivers of today's economy is confidence, and we'll see what consumer confidence numbers come in at. But I think it's pretty good overall. And this, these reports are really interesting. Sometimes they're seasonal. Sometimes they have to do with industries. And speaking of jobs, last week we got some bad news here in California. 5,300 layoffs for Toyota. They're going to be closing down one of their main plants here, and that's a big loss for California.
Yeah, it's huge. 5,300 people are now out of work.
5,300 people that will impact this number that we just discussed a minute ago. So that's kind of a bummer. And, again, something hopefully our legislators are paying attention to, and they can try to figure out how to bring some jobs back to California instead of constantly losing jobs in California. Dan, tell me a little bit about, the other thing that we've been watching is interest rates. So tell me where interest rates are at and what impact we've seen over the last, say, 2 or 3 weeks.
Well, they've been getting better, actually. I mean, we saw that the bonds are selling well, so that means rates are going down, surprisingly enough. I think they've probably gone down a quarter point in the last 2 weeks or so.
So probably a good time to take opportunities and refinance if you've been
Absolutely.
Waiting on the fence, or maybe been told you couldn't because you didn't have any equity in the past.
Right. I mean, it's now is the time.
Yeah.
I always say that, but we really mean it, because eventually they're going to go up, especially now that the Fed, I'm sure you saw that too, they're cutting the bond buying by another 15 million, I think it was.
Yeah, and
Something
they're going to continue to cut it back. I mean, that's a reality, and it's not necessarily a bad thing. You know, as we see this final piece of all the economic stimulus that we did to recover from the Great Recession, as they call it, ultimately we're going to see that I think it's going to create more predictability for the stock market, a little less emotion in the stock market, even though it's always driven by emotion.
And I said, by the way, I said 15 million. I meant 15 billion.
Yeah, 15 million is like a blink of an eye.
Right.
Yeah,
it's a rounding error.
Yeah. So I wanted to go over that, and then the most important thing to me, and why I think interest rates have gotten a little bit better today, even compared to yesterday, is that inflation is tame. It continues to be tame. However, I'm going to go out on a limb, and I'm going to say, watch out. I'm starting to see inflation in real life. It hasn't made it to the numbers yet. I'm starting to see it in real life. I don't know about you. My medical bills are really expensive. Gas is out of control. I think the biggest thing, by the way, is that Chipotle is going to raise their prices.
First time in 3 years.
Right.
Yeah. Oh, did you hear that voice? Wow.
I'm a Chipotle guy.
So am I.
Well, let's go ahead and bring you in. Our guest today is PJ Harrigan with Radian Guarantee, a vice president of the Western 14 states you manage. And he'll be bringing us up to speed on what's happening in the mortgage insurance world. In fact, you know, we'll kind of talk about what is mortgage insurance. It's not as bad as you think it is. I'll let you in on that. It's actually one of the best tools that we have to operate here with at Cherry Creek Mortgage. And it's made people hundreds of thousands of dollars. It's like, wait a second, how could insurance make people hundreds of thousands of dollars? We'll definitely talk about that today. And PJ, tell us a little bit about Radian real quick before we go to break.
Well, Radian is a mortgage insurance company. It's been around 30 plus years, and what we do is offer mortgage insurance to mortgage companies, credit unions, banks to help people buy homes. And we're based in Philadelphia, Pennsylvania. Depending on how you look at it, we're number 1 or 2 in the market. We have more insurance in force than any other mortgage insurance company. I'm relatively new to Radian. I've been here 3 years, and when I joined Radian, it was right after the market crashed, and there was a lot of thought that companies like Radian wouldn't survive.
Some didn't.
Some didn't. Exactly right. A couple of them went down right after I joined Radian, and Radian's got a great story in that it's been able to persevere through the amount of loans that have gone bad, paid their claims, and has actually grown the past 3 years.
Oh, that's awesome. And, you know, what we're going to dig into today, PJ, is what's really important is how someone can benefit from mortgage insurance. And I know that we often think of mortgage insurance as a stigma. And I can't tell you as a lender how many times I've heard that I don't want mortgage insurance. It's horrible. I'm going to wait till I have 20% down because I don't want mortgage insurance. It's not tax deductible, yada, yada, yada. I've heard 155 stories about why mortgage insurance is bad, but I kind of let it slip there. I kind of said tax there. So one tax strategy we will talk about today is how to utilize mortgage insurance to the benefit of your personal tax return. So that's something we'll get into a little bit later. In the meantime, thank you for joining Dan Hunt, Gino Franti. Dan Hunt stepping in for Don Getling today.
I won't do as good a job, but I'll try.
Well, when we come back, we'll dig into the benefits of mortgage insurance on the Don and Gino Real Estate and Finance Show on AM 1220 KHTS. We'll be right back.